Good evening. This is Ken Long from Tortoise Capital Management with a case study on swing and day trading and framing for May 1st and May 2nd. And we're going to start with the overnight context and why it can help your intraday trading if you have a lens into what's going on in the swing trade or the next higher time frame. When I say swing trade, I'm normally thinking like the last 10 days, and then more specifically the last couple days. So if we take a look at the market health check, this is daily charts on the S&P, symbol SPY. The vertical blue lines are 10, 20, and 30 days of look back. The horizontal red lines are support levels that have held in the past. The purple line is the swing high at 160 right now, and you can see that was just tested on Wednesday of this week. The dark blue shaded region is the 30-period Bollinger Band plus or minus 1 standard deviation, with the red line being the Bollinger Band mean. The lighter blue shaded area is the floodplain, as we call it, which is the 30-period Bollinger Band plus or minus 2. The black line in the background here is the slope of the 30-period regression line, and that's marked off against this index over here. So it's always, even the lowest value at 0.05 is positive. So this is an upward sloping 30-period regression line, and here as it's moving up, it's actually improving. In this area where it's going down, the slope of the regression line was getting worse, but it was still positive. This little shaded area here is the 200-day moving average, and the area below it, 80x14 marked off across the top. A couple events just of notice. This is when the Cyprus nationalization of savings was announced, and then this was the Boston bombing here. The thick black line is the 30-period regression line, lagged by 1 day, and then the outer black lines are the RAF regression channel formed by the maximum excursion from the regression line during the look-back period. And so what we had was a market that had 2 legs up to retest the swing high at 160, and then the Boston bombing happened, and it sold off to the bottom of the river and the bottom of the regression channel here at 154. And then over that weekend when they caught those guys, then there was a nice move back up to retest the swing high at about 160, and then on Wednesday what we had was the first day of a sell-off after about 10 days of uninterrupted up. And so it was a big red candle kind of a day on Wednesday, May 1st, and so that really favored the short side trade. And just as an example, the last trade of the day that we did on May 1st was in using the regression line crossover frame. Now we're looking at 3-minute charts and symbol UVXY, which is the double VIX ETF. And now we've still got the river and the floodplain as noted before. The dark black is the 30-period regression line. Girls, knock it off. The blue line is the 10-period regression. This orange ribbon-looking thing here is the 2-period Bollinger Band, which I'm taking to read as real price. And so what we had was, going into the afternoon, after a series of nice moves up in UVXY, because it goes up when volatility increases, which normally happens when the market's going down. This purple line is the volume-weighted average price. And so what we had was at 3 p.m. going into the last hour, the market had pretty much stabilized here, and then there was room for one more run. And so what we noticed was the UVXY had left the floodplain and made like a swing low here at about 640. And then the ribbon and the blue regression line, the 10-period regression line, rolled up. We got a regression line crossover here where the 10 crosses the 30, which is marked up with that vertical blue line. And then the price ribbon shortly thereafter entered the river. It went briefly to the top of the river and pulled back, and then held support inside the river, right vicinity the VWAP here in this blue circle, and then resumed, and this time it went up, tested the top of the river again, and this time when it came down, it held at the Bollinger Band mean. So we have this lazy W type of a formation, and that's one of our standard plays in the regression line crossover, and that is after an RLCO outside the river, then we're looking for, this next play looks for a finding support at the Bollinger Band mean, and now we have a higher low. That's sort of indicated by this sloping red line here. And then I play the entry when price leaves the river here inside the green circle, and so we get an entry at 6.54, and I'm going to use a 10-cent stop, which in this case would be at 6.44, or right below the bottom of the river. We would take a violation of the Bollinger Band mean, however, as an actual signal to exit. So we're not risking that much price information. But rather than failing against all odds, this thing takes off and goes directly from 6.54 to 6.82, or about about 28-cent move in 3-minute charts. That's 1, 2, 3, 4, 5, 6, 7. In about 20 minutes, it makes that 40-cent move. Gets to the top here, sells off, and then in this long red spike coming down, you can see the ribbon has already started to roll over. We go ahead and take our exit at 6.72 and pocket 1.5R. So this last little surge of increased volatility right at the close had us prepared for continuation of weakness on the next day. And so when we go back and look at the daily chart, this looks very much like day one of selling, and then in the past where we've seen that kind of selling, the next day has featured potentially some lower movements and some additional weakness. So one of the symbols that's always on our list lately for weakness is Cliffs Natural Resources. It had closed on Wednesday, on May 1st, in this sideways quiet channel, and then right from the open it gapped down and then left the river with volume. And so in order to play the weak side of it, we went ahead short at 20.10 with a 30-cent stop, which is just above the Bollinger Band mean and is above the price ribbon for the day so far. And it was a favorable move for us. It went down sharply. When it pulled back, it never even got into the river here, and just touched the edge of the river here and continued to fail. So we felt comfortable taking it all the way down and then covering at 1917. It just felt full. That was a 90-minute move right there. And when the smoke had cleared, we were into this for 5R. There was a second entry here at 1960, and basically after this sideways motion here, there should be another green circle. Then it violates here and makes another new low of the day after not even getting up to the VWAP. That's a second place to add a position, by which time we've got 2R in hand and momentum and a new low of the day. That's sort of an automatic play for a second position, and then between them, the two positions net us 5R. So that's sort of a reason to be interested in the swing trade time frame, to give you some directional insight into the next day. And so now we'll pick up the tail here with some more swing and day framing on the second day. So now we're looking at TNA on hourly charts, and our friend Kim Anderson calls this the regression line stretch, and that is on an hourly chart. The previous day the market had sold off. You can see this one-day sell-off on Wednesday. And then the 10-period regression line had a extreme pull away from the 30-period. And in other cases where it's done that and then made sharp reversals, that's been a lucrative trade. So this would be one where you see this happening. You have a target price back here to the red line. In practice, when we see that forming and then we shift over to the 3-minute, what you notice is a weak close on Wednesday. On Thursday, it gaps up, and then it holds sideways for about 45 minutes, and the VWAP is established. It's finding support here at the edge of the river, never even gets down to the Bollinger Band mean, and now when the 30-period and the 10 and the price have all left the river, we call that the beginning of trending behavior. So we go ahead and buy that at 41.30 with a 30-cent initial stop, and it moves out smartly in our directions in our direction, and then we're willing to take that exit at 41.81 for about 1.5 hours, and you can see the regression line crossover occurring right here. Well, as soon as that happens, now what we're doing is we take that exit because we're concerned about we don't want to give back that nice move that we just had, because the next target after an RLCO is back here at the Bollinger Band mean. So we take the preemptive stop, and then that gives us a reason to start being ready to stalk. In this case, it finds support just outside the river. It doesn't even get into the river, certainly doesn't get back to the Bollinger Band mean, and then in our standard reentry, after 3 bars, we're able to get in here to re-enter at 41.90. After having just exited at 41.80, we're back in at 41.90, and now we've got a 20-cent stop rather than 30 because we're further into the day and we've already had one leg up. So I feel like we can be a little bit closer, have a slightly larger position size because of the tighter stop. And now it moves out in our direction again, gets to the edge of the floodplain, then starts traversing sideways, coming back towards the river. We get a regression line crossover here, and then we take this exit in the usual way at 42.35, and that's let's see, that's about 40 cents. That's about a little over 2R. So in those two trades, they're talking 1.5R here, and then about 2R here in pretty quick order. So the question in the chat room was, why would you get out here after 7 bars of sideways motion? And really the reason is because a natural expectable move after a regression line crossover outside the river is a move back to the Bollinger Band mean, in this case at about 42. Well, we re-entered at 41.90, and we got 2R in hand up here, and so I don't want to give that all back just because I believe that this is an uptrend and that it ought to get to the Bollinger Band mean and go. So what I'm willing to do is willing to give up a dime in order to protect against 20 cents down here. And so this is a little zoom in on that. And so if when we take this exit here, it's because we would not be surprised if price came all the way back to the Bollinger Band mean. And so and then what happens here in about 15 minutes later is it finds support, this time just on the inside of the river. Last time the ribbon didn't even get into the river, but now we had it held support here. Then there was a higher low on a green candle, so that's this red line indicating an upward move, and now you can see the ribbon has already turned. And now after we've seen it close at a low, didn't make a new low, now made a higher low. In this next live candle, as soon as it takes out the previous candle's high, we're back in. And now we've got a re-entry at 42.38 with a 20-cent stop, which would be down here around the Bollinger Band mean. So to frame that up a little more explicitly, essentially, again, the RLCO outside the river, a natural price target on reversion to the mean is the Bollinger Band mean in this purple circle. And so that's the move that I'm trying to protect against by exiting here in the red circle. Because if it comes back all the way here to 42, you can see that I'm very close to my trade break-even line, and now instead of having 2R in hand and being able to cash a couple R, I've given back 2R, and then I'd be willing to rebuy it if it held support here, because I'm still thinking the price trend is up. So rather than waiting to see if it would hold at the Bollinger Band mean, I'd rather cash 2 in hand. And then in this case, it actually rolls over and goes back up. And now I can re-enter approximately where I got out. And then I've been able to offset the risk in that period of time. So it looks like there was no net difference in paying a transaction fee. But really, the purpose of this exit is to lock this leg in and protect against this move. And then anywhere between here and really the bottom of the river, I'm willing to re-enter on this kind of price pattern that you see inside the black box. Well, later on it turns out that entry, it gets up to 40 to 56, and then it drifts back down. It comes back into the river, and then I turned this into a scratch trade. It gave it some time to work, but now it isn't. Now you can see we're into the lunch hour. The 30 period has rolled over and is now flatlining, and you can see that the steam is coming out of this Bollinger Band mean and in the river. Whoops. Also, so that turns into a scratch trade here. Now, after that scratch trade, which occurs in here, about 30 minutes later, we get it has now found support at the bottom of the river. We've got sideways quiet channel because the Bollinger Band mean is flat. The width of the river is narrow. Price and both regression lines are inside the river, and it's held support. And now it's made a new high here, and my thought is I want to get back into this not later than 42.52 because that would be a new high of the day or above the ribbon. Yeah, this is actually the high, but if it clears that ribbon, I want to be in here certainly. And so now what I'm looking to do is I'm hypothesizing that the bottom of the river is going to hold, so I'll put a stop down here. And now I'm going to play. I'd like to have a position in hand, so if it tests this line and then crosses, I expect the next move to be fast and large, and rather than try to chase that, I'd like to be positioned so that I have an R in hand as it's making its nice move, and then instead of figuring out if I can chase it, I have a nice move in hand. I can move to no lose as it begins to move higher, and then I'd be very satisfied with that trade. Now let's take a look. We'll go back now to this is still 3 minutes, but now we're looking at 4 days. And so I want to put this move into context. This is that the line where if it breaks through and makes a new ribbon high of the day, I think it's going to move sharply. This is how the swing trade frame informs my my intraday trading. So these are the last 2 days of that large move up that took it back to like 160 in the S&P, which is 4350 in TNA, which is the triple Russell ETF. And so on Wednesday, May 1st, there was a sharp sell-off. There was a sharp gap down, and then decisive selling all day with a weak close. And then rather than this being the second day of selling pressure, in fact, what we get is a slight gap up, and now this is that nice long move that we just took 3.5 R out of. As we saw in the previous chart, you can see the VWAP has made the turn, the river has made the turn, and now it's come into this sideways consolidation pattern here between 42.25 and 42.50. Well, when it held support at the bottom of the river, that's the move we were stalking before and hypothesizing that if it breaks through the blue line, there's no resistance between 42.50 and 43.50, and that's a 2.5% move. And then if it breaks, and then if it breaks above 43.50, it's really off and running. But to me, if this 1 day of selling was overdone, and it looks to me like this purple line around 43.50 could be considered as a reasonable price target for upside moves to work off this move. And that would be the resumption of this bearish tendency. So on the second day, there was no fail. It now looks like the market is responding to this dip as a buy on dip opportunity. So now, if I want to buy somewhere in this region, and if I'm going to treat this as 2 risk units above, that would give me a stop somewhere down around this red line. And you can see by inspection that if this is my risk, then I've got 1, 2 upsides just to go up and retest the previous swing high. And so I really like that. I really like that frame. And now coming back, that's what the larger context of one time frame up looks like. Why this is such a nice setup here is because if it simply goes up and just tests the swing high, then I got paid for taking a chance on it breaking through. But if it breaks through, I'm going to have 1 R in hand with momentum, and then I'll be able to add a second position, and then there's another almost $1 move from here to the next sign of resistance. And then if it gets to that resistance, there's every reason to believe the bull will continue, and then this could turn into a monstrous good trade that I can continue to work over the next couple days. So we're into this at 42.32 with a 20-cent stop. And then about 30 minutes later, after that entry here, it has marched up. It blasted right through the Bollinger Band mean, never hesitated. It flows right up to the blue line, goes through 42.52, and now we feel pretty good about this because we're not going to lose any money on this trade. You can see that the 30-period regression line is just about to leave the river, and that's going to be the beginning of trending behavior, and now there could be another $1 to the upside. So we're feeling pretty good about that one. However, it actually rolls over, and we take our 1 R exit and cash this as a 1R move. So the quiz to the guys in the chat room today was find the R in this trade, and it's basically from this regression line crossover at the southern part of the river to this RLCO here just outside the river, and if you can trade with a 20 or 30 cent stop, that kind of a move in about 45 minutes will give you an R after commissions and slippage, and you might have been better if you could get some of this spiky move into the floodplain. I didn't get that, but that's where the R is between regression line crossover and regression line crossover. And now this is what that marked up trade with the 1R looks like. Entry at 42.32 with a 20 or 30 cents, 20 cent stop, and then exiting at 42.52 here in this congestion, and that's the R in that trade. Shortly thereafter, market does not fail back to the Bollinger Band mean, which is what we wouldn't be surprised from a regression line crossover. It comes just into the river, and then we got our universal entry to restart right here. So we go ahead and re-enter now at 42.57. In other words, just 5 cents higher than where we exited for insurance purposes earlier. But instead of it moving out and continuing on to 43.50, it sells off. It starts crossing the Bollinger Band mean. That's a half an hour loss for us. We don't need to see the bottom of the river to wonder if it's going to go, because we know how to re-enter if it holds here. So we just go ahead and take the loss professionally at 42.47, and that's a minus 0.5 R, and that's sort of a trade sequence that really is featuring intraday trade frames, but informed by trade frames from the higher or swing trade time frame. So that's today's lesson. Thanks for your kind attention. It's Ken Long from Tortoise Capital. Keep your powder dry and your risk measured.